Hello and welcome to the weekly roundup for the week ending Friday the 26th of February. Hope that you're enjoying these weekly reports. Do subscribe to receive regular stock market content, and any questions just pop them in the comments box below. Also invite you to follow the free stock market reports and research on tech stocks, banking stocks and IPOs just using the link in the description below. And keep your eyes on the IPO alerts this year. Promises to be a big one, not only here in the UK but in the US as well. Big names such as Deliveroo, McLaren, Brewdog, Vodafone's Vantage Towers and Lamborghini all lining up. In general, the vaccine rollout continues rapidly and smoothly, and expectations of a strong economic recovery are picking up. Here in the UK, Boris Johnson set out the roadmap for the reopening of the UK economy, which has boosted sentiment and lifted UK assets. However, main focus for the markets has actually been on the US bond market and the inflation expectations over there. Investors are starting to expect the US economy to overheat on the back of a strong economic recovery and Biden's $1.9 trillion stimulus package. And this has seen the yield on the 10-year Treasury bond risen from 0.9% at the turn of the year to a pre-pandemic high of 1.6% yesterday. The move higher has gained momentum really just in the last day or two. Initially, traders ignored this move, especially with soothing words from the Fed's chair, Jerome Powell, who reiterated that the Fed will remain accommodative. Stocks even powered to record highs, and the US dollar dropped to a 7-week low. However, the second part of the week is the other side of the story really. Investors appear to have woken up to the ramifications of rising interest rates, or even the potential of a rising interest rate. The prospect of higher borrowing costs has dragged on stocks, and the prospect of intervention from the Fed has actually given a bit of a boost to the greenback. So across the week, we see the Ftse looking to finish around 0.1% in the positive. Not really telling the tale of the week, to be fair. We've seen some high impact volatility, and again we're seeing that in the DAX finishing -1% across the week. In the US, the S&P is set for -2%, so losing on the week's trading. Dow did actually reach a fresh record high over 32,000 before easing back, and it's now set for a 0.3% loss across the whole week, outperforming the Nasdaq, which has tumbled 5.4% so far this week. Tech stocks with a real notable underperformers. Again, investors rotating out of the growth stocks. In the FX markets, pound continues to be the star performer, or certainly was across the first half of the week, reaching a 35-month high, over 1.42 against the dollar, whilst rallying to an 11-month high against the euro. And this again supported by the rapid vaccine rollout and Boris Johnson's reopening plans. However, the surge in the US dollar means that the pound against the dollar is now on track for a weekly loss of 0.5%. Euro against the dollar set to finish flat over the week. Looking in the commodities market, West Texas intermediaries surged over 6% across the week despite today's 1% decline. US crude hit a fresh 13-month high of $63.8 on the barrel, on again more optimism of reopening, and that creating a boost for future demand expectations. And production in Texas ramped up a bit more slowly than was expected after that cold snap. Over here in the UK, we've seen bank stocks remaining in focus, Hsbc and Lloyds most notably. Hsbc trades 3% up across the week and is set for monthly gains of 13%. They reported full year 2020 results, and like the other banks, it weren't great. Pre-tax profits declined 34% year on year to $8.78 billion. However, better than the expected 8.33 billion. Yeah, coming in a little bit ahead. Dividend was also reinstated at 15 cents a share on the interim payout, and HSBC also unveiled a further strategic shift to Asia and just confirmed that it would look to sell its US retail arm. Lloyds, the what some would describe the ultimate bellwether on the UK economy, does actually trade up 1.5% this week after revealing that annual profits fell a staggering 72% to £1.2 billion. Although, again, better than the expectation of 905 million that was forecast. The bad loan write-offs, that hit £4.2 billion, again better than the 4.7 billion expected. And the dividend has also been reinstated, so giving investors there a little bit of joy. Most notable in the US stocks was Airbnb. They tumbled almost 10% across the week after they reported a $4.6 billion net loss in 2020 in its first earnings report as a public company. They generated $3.4 billion in revenue last year, and that's a 30% decline year on year. In the final quarter, revenue was down 22% compared to the same period a year before, due to the ongoing COVID travel restrictions. But they remain hopeful that travel will pick up later this year. I think that's something you could say for all the travel companies, really. So that's it for this week. Thank you very much for watching. Please remember to subscribe. Any questions, don't hesitate to ask. Have a great weekend. Enjoy the sunshine if you've got it, and keep yourself safe.